Okay, to state the obvious, tariffs have dominated the headlines over the last few months, and they're driving the stock market. The stock market is following tariff headlines. But there's more to it. A large proportion of GDP is not impacted by tariffs on goods imports. For example, in the US, 70% of GDP is services consumption. So, across our research platform and in our asset allocation committee, the bulls and the bears are talking about a lot more than just tariffs. We're debating the following. The bulls are saying, okay, earnings are growing at a steady clip. The Fed wants to cut, and the US consumer remains strong. What are the bears saying? Well, valuations are pretty high, growth is slowing, and policy risk remains very high. Importantly, on our asset allocation committee, we're discussing the risk of surprises on inflation. We think this could be a key risk for at least 4 reasons. 1, commodities prices bear watching. Second, wages are growing at 4%, hardly consistent with 2% inflation. Third, there is a housing shortage in the US. And fourth, of course, tariffs can be inflationary. So overall, our asset allocation committee strategy focuses on the interplay between economic and geopolitical dynamics. Our asset allocation committee is positioned for 3 things. Number 1, continued market broadening. We have long positions in value and international stocks. Number 2, resilience to positive and negative tail events. And number 3, inflation risk and possible treasuries underperformance. Look, we're at a critical time in capital markets history. Now's not the time to panic. And by the way, it never is the time to panic. Markets can surprise us on the downside and on the upside. So diversification is important more than ever, and it happens to be cheap because diversifying assets currently trade at a lower valuation. So that is our strategy. Thank you.
T. Rowe Price